Thank you, Eric. Thank you, gentlemen and ladies, for the time also given to me to talk about a somehow little bit different story. Eagle Mountain Gold Mine is located in Guyana in South America, the only English-speaking country of South America. My name is Yannis Tsitos. I'm a physicist, geophysicist, and the president of GoldSource. Usual company disclaimer. Okay, highlights. There is no better time to talk about GoldSource, I would say, rather than this one, and it's completely coincidental, because we have just initiated production. Actually, we are in the phase of commissioning, as we call it. We did the first gold pour in March, completed construction earlier in January. We sold the first gold in April, and we expect to be in full commercial production, or what we call 80% or in excess of 80% of the nameplate throughput capacity sometime in the next 6 to 8 weeks. Subsequent to that, you see a lot of improvements as we go, because this is a bootstrap operation based on what we call phased development approach. I will talk about that and why I believe it's such a great way of developing some commodity that is somehow easier to do that, to develop in stages such as precious metals and in this case free gold on surface. So what we expect to do here is the next 7 years we will mine the oxide part of the deposit, what we call saprolite, effectively the top 25 meters that carry economic grade of about 1.4 grams per ton average. On the compliance side, the resource over a project that is just under 1 million ounces and open in all directions. We are going to process that with just gravity plant in the first few while. So effectively, we capture 50 to 60% of the gold. We don't lose the rest of the gold. We inventorize it because we are going to mobilize a leach reactor in less than a year, we hope. So the most important thing is that we went under budget to develop that for, yes, it is true, $5 million. And you will see what I'm talking when you see the photos later on. But the most important thing is the 600 ounces, $600 per ounce of operating cost. And that is all in sustaining capital out of a compliant PEA 4301 done by independent engineers. So effectively, we will produce gold at $480 per ounce cash cost in Guyana. And then when I apportion sustaining capital and Canadian overheads, it becomes about $620. We are processing at the moment at about 1,000 tons per day with one shift, okay, 10-hour shift, and we will move to about 4,000 tons per day by year 3 to 4. So all these interesting numbers that you will see as we go are based only on this kind of inventory and this kind of production. So we have a lot of upside from a point of view that we can put a second shift later in the year and then mobilize the leach reactor to recover the balance of the gold from what we call tailings rejects. Everything starts from the team, and here we have assembled a very interesting team, as Eric said. I effectively had the asset at a different vehicle. We amalgamated the company 2 years ago with GoldSource Mines. I know Eric Fear as probably one of the best mining engineers I ever met. Scott River, the Silvercrest Mines team that they sold recently. They're similarly developed Santa Elena project through a phased development approach, starting small about 5 years ago and coming to a point where it was an attractive target for First Majestic. They concluded that last year, the spin-off another company you will hear tomorrow. But this is an exceptional team, and we call it sister companies because we effectively operate from the same office. I have about personally 28 years experience in the mining business. I have been blessed to have seen both sides of the fence. I was 19 years with BHP Billiton. In the beginning as a chief geophysicist for South America. In the last 9 years with them, the business development manager for them in Canada. So I opened the office of Billiton in Canada for BHP, and I was on your side of the fence, try to find the good juniors, the juniors with the projects that will deliver value to a corporation of that size. And I did a lot of deals similar to what you saw earlier this morning, like Aston Bay. So, but you will see Eric work for Newmont and Placer with Scott and so on, and Nick, a great young guy as our new CFO coming from the Canaccord environment and great knowledge of the capital markets. If I add board and management, we are talking about 250 years of collective experience here in a team that has discovered deposits, has made mines, has sold companies, and has sold deposits. Capital structure. 132 million shares. We've got a lot of warrants out there. About $9 million are sitting in warrants. They're all in the money as of about a couple of weeks ago, I guess. We all have a skin on the game in terms of management and half the board. We all participated in all recent financings of the company in the last 3 years. This is very important for you to understand that we are not here to do something and walk out tomorrow, but we have dedicated the story like this, bone and the dog somehow, in taking from an exploration vehicle into a production vehicle and a middle-sized producing company. So we control about 16% of it. IAMGOLD controls 5%, and a major fund from New York another 16%. So we're about $50 million capitalization at the moment. Everything starts with logistics, and when I did my risk analysis, bread and butter work in BHP, I tell you that a lot of projects have technical success. A lot of projects come with favorable metallurgy or geology, but sometimes there are other discontinuities that do not allow the project to be developed, namely social issues, environmental issues, government instability, or a dodgy country with a funny mining law. I like this project when I bought it in 2010 from Cambior because for two reasons. A, I like Guyana. It's the only English-speaking country in South America with a British law, robust government, and 29% of the GDP coming from resources, namely gold and bauxite. So I have seen a very favorable environment with a mining law that hasn't been changed for the last 35 years. The second important thing is infrastructure. We're talking about a country that is green forest. So this project is probably, or at least before the Aurora was developed last year, was the only project in Guyana where you can pick up a truck and drive to the project without having to take barges or other funny transportation vehicles. So we are about 10 kilometers away of the nearest town of Madia, of about 3,500 people, where we draw half our labor force at the moment. We are 43 kilometers from the Omai gold mine, the famous mine that produced about 4 million ounces by Golden Star and Cambior, and a mine that closed down in 2006. Same stratigraphy, same granitoid, same lineations in terms of how the deposit was created. So we control a piece of land of about 10,000 hectares, of which 300 hectares are fully mineralized with gold starting from surface. The only capital project we had to do in terms of beyond the mine itself was to rehabilitate this 10 kilometers road from Madia to Eagle Mountain. Now we have probably one of the best roads in Guyana, I would say, but there is an airstrip there, and we can fly fixed wing with commercial flights or charters any day of the week, and we have helipads on our project too. So. All right, so it's just under 1 million ounces of compliant gold resource at about 1.4 grams per ton. As you can see on this dependent 4311 was done by Ekahau in 2012. We have drilled about 36,000 meters. 95% of the holes intersected economic gold starting from surface. In some cases, we have very small strip. But over the exploitation of the saprolite layer, we will face 0.9 to 1 strip ratio, and the first 1.5 years we work with a 0 strip. So effectively, we mine everything from surface. You see the resource has been split between saprolite and fresh hard rock. Obviously, we are talking here only about the economics on processing of saprolite for 7 years. So the hard rock is the next phase development where you will require obviously a milling operation and different economics. But effectively, you pre-strip your project, you have all this exposed. The project is open in 3 lateral directions. So it comes a point where you don't want to drill anymore. You have found enough stuff, and we spent $7.5 million in exploring ourselves and about $12 million as Cambio IM Gold. So it is a point where you have economic grade on surface, you want to go and mine, therefore stop diluting your shareholders and go and create some free cash flow to redevelop, to keep investing in the project and grow it to a medium-sized operation at about 45,000 ounces a year in 3 years. All right, so effectively, I mean, size does matter, no doubt about that, but in my career, I have seen that the rate of return is a very important parameter. And because this is the one that the shareholders want to see, they want to see how quickly any stakeholder, not only the shareholders of the company, how quickly I'm getting back my money here. And we are talking on after-tax here of 63%, processing and recovering only 60% of the gold of the saprolite. So the rest of the gold has not been counted into that stuff. The 5-year strategy is obviously we're going to grow from 1,000 tons a day, and we do have days that we reach now at one shift about 1,200 tons. We also have days that we reach only 650 tons. So we will call it, as I said, in the next 6 to 8 weeks as commercial production with consistency, but we will go rapidly by introducing a night shift that is not part of that plan later in the summer and the cyanide leach reactor in the fall. So we may reach 3,500 to 4,000 tons per day in about 2.5 to 3 years, rather than 4 years that the PEA said. So stay tuned to see also a feasibility study that is going to be done not by selling shares, but from free cash flow, and therefore present different economics as we go. We have our eyes open. Guyana has become a hotspot. Guyana Gulf is open, a huge, very interesting mine called Aurora last year. An Australian junior called Troy Resources opened another deposit. Sunspring Minerals have a huge gold and copper resource. So Barrick just entered in a major deal now with another exploring Guyana. So it's the same metallogenic belt that starts from Venezuela and carries on through Guyanas into Ghana and Ivory Coast in Africa, Burkina Faso, and so on. But if you see the African side, you see 3 times the amount of deposits and mines that you see in the American side. The differences are 2. One is a jungle, on the other side is an arid environment, and the other thing is you have 300 million African people panning every single stream. So a lot of more deposits will be found in South America in this part of the world. So now we see the majors start showing attention with both Newmont and Barrick and additionally other medium-sized companies. Some photographs before I finish. This is not a Garimpo operation. This is a sophisticated gravity plant. In other words, we do some proprietary stuff that we felt were very much necessary to improve the recoveries. We are using, from the grizzly, we go into what we call a scrubber. We use ball media inside the scrubber, so without having the necessity of high power, we still imitate a ball mill effectively, going slower. So we create a slurry, which we pass from screens -2 millimeters going to that, and then the centrifugal gravity concentrators that you see on the bottom of the screen that spin your slurry at about 130 G and therefore separate the gold. So then everything is fully automated. Separate Canadian company built up the mine with us in addition to our internal expertise with Eric and the team. The pit now, we're still on the first bench, but we have expanded to about 150 meters in one dimension and 200 on the other. You can see the stockpile on the bottom. I would like to say we are mining non-compliant resource at the moment. So we had to put the plant somewhere. It's about 2 kilometers by 1.5 kilometers of saprolite, all mineralized. So we did the condemnation drilling in 2 areas to put the plant. And guess what? We found gold on both areas. and we decided to put the plant on one of them and start the mining from the immediate area next to the plant in order to test the processing plant. So we haven't even started mining the compliant resource yet, and we produce gold as we speak. Then we go to, obviously, the gold room has a shaking table, and we see the gold stream there, and that's what you collect, producing doré. We have no nasties and no silver in the deposit, so it comes effectively 90%, 89 to 90% doré, with the balance being iron. So that's what we produce, and we sell at the moment to the Guyana Government Board. They pay you full price, London price, which they change twice a day. So that's my last slide. So why GoldSource Mines? Believe, and through my career, that the team is the most important thing in the companies you are going to scrutinize this coming 48 hours. Everything starts from the team and their dedication, and their operating plan. How are they going to move an exploration project into the next phases? Then comes the quality of the project, obviously, and in this case, we have gold starting from surface at the mineable grade. So there's no brainer that at some point you want to stop drilling and go and produce. And then obviously is the growth plan. So we do have a lot of optionality. We carry only $1 million of debt, so therefore we can do so many things. Already they are knocking the door to potentially finance us to go to a fast-track development and develop the mine right away as a big deposit. But, always you have to go through small steps or baby steps, I would say, before you do the big ones. So that's where we are, and this timing is incredible. We deliver the project at the budget because this is a bootstrap operation team. So stay tuned, and please come and see me if you want some more information or visit our webpage. I would like more companies to follow our example and develop similarly projects as such. Thank you very much.